Hello, everybody. I'm your boss, Joe Boss, and welcome to another month ahead trade plan. This is going to be for May 2024, the month ahead here. Go ahead and let me know if there's any charts you'd like me to check out for the month ahead or any particular events over the next month. Go ahead and check your calendar for watching this live, and I can go ahead and give some commentary on what I think those events and how they're going to impact the markets. Anyways, I'm going to use this indicator for some of the analysis today, the seasonal forecasts indicator. So for the month ahead, I'm just going to be using the indicators, setting some nominal expectations. And as we get new information over the month ahead, we'll be setting new sets of expectations on the week-by-week basis. Or if we get some monthly outlooks, given that new information, probably more likely to occur after next week's FOMC than not, then we can go ahead and update our expectations again. So with that all in mind, let's go ahead and start off with the US dollar pairs. Now, a lot of these charts already have some arrows out into the future. These are partially from yesterday's week ahead stream, and we're going to see how they fit into the picture of the whole month ahead. So first off, let's hide those images so we have a clear view. And when we look at the yield spreads here on Aussie dollar, the yield spreads are quite positive. The long-term yields over here are quite flat at the moment, close to zero. These are slightly positive intermediate yield spreads. So over the last week, yield spreads have improved quite a lot. So most of this green that we see here on this bar is coming from the relative growth we've seen from this low over here. Not so much short term, not so much improvement over the long term. So over the next week, we could see this lag start to turn more white, turn more neutral on the yield spreads here. And don't get me wrong, we could see some improvement out of Australia and China, for that matter. That was mentioned in the week ahead stream yesterday. So if we get some good news out of China, that could help the future growth outlook for Australia and New Zealand. But just looking at Australian economic data, it's not looking fantastic. I believe the first rate cut for Australia is still expected for August of this year, if I'm not mistaken. So the relative yield spreads, the relative cash rate spreads or cash spreads between the FOMC and the RBA are still going to be quite large as the Fed stays higher for longer. So I would continue to expect this thing to roll over. So with that in mind, we can go ahead and find what is a curved line, if I could find it. Man, TradingView has a lot of drawings. Oh yeah, there we go, curve. Something along these lines here is probably what I'd have as my net expectation. And we can go ahead and apply the defaults here. Set this to an arrow. So I'm expecting this thing to kind of curve out as we get into FOMC. Yeah, probably more along those lines. So we find a lot of highs for the month ahead roughly around, what is it? 65.5, 65.8. Zoom in a little bit more so you guys can see a little clearly. Kind of in this zone right here that I'm circling around. And I'm also wondering, can I add text? No, I can't add text. So maybe it would just be better for me to do my timestamps. Yeah, the timestamp arrows. So net. Don't want to change the interval. I want to change the text here. It's the 28th today. So for the month, yeah, we could see a move up to around here. Let's see. 2, 3. FOMC is right around here. Right at the start of the month. Yikes. We know the FOMC is more likely than not going to lean on the more neutral hawkish side of their expectations, so I'm not particularly risk on for a lot of these assets. But you can actually see here that risk on line that we drew in yesterday's stream lines up with the threshold of when we start to see very low probabilities of finding a high for the month. And the next most likely area is around 66.50, right around here. So on the break of this, let's say FOMC comes out more dovish, a move up here is what I would expect next. Other than that, it seems like most of the lows for a bearish move would be something along these lines here. Go ahead and timestamp that. And let's go ahead and bring up our seasonal forecasts tool. Yeah. So it seems like most of the negative expected value comes in after the third trading day of May. We do have some here over the next few days, some in the beginning, the first couple of trading days of May. But seasonally, over the last 24 years or so, since essentially 2000 for, again, this chart goes back, I think, to 2002, 2003. So we have 20 years of data to work with here. It seems like seasonally, whether or not any given day is bullish or bearish is pretty much 50-50. But the expected value for each one of these trading days is clearly negative in the 2 weeks here closer to the middle of May. And you can see that by the negative drift here on the Aussie dollar, especially from this 6th to 13th trading day here. So this is the primary spot in time over the next month that I'd be concerned that we have any sort of negative seasonal moves that drag us lower. And if there is a rebound, I would be expecting it closer towards the end of the month, like so. So more sideways movement into some recovery into the end of the month. And if we look here, yeah, there you go. 64, so that's about 130 pips lower from the current price, essentially going back to these lows over here. There is one more thing that we can check out, and that is the probability pivots. This is using the... Actually, I'm going to delete these lines here. These lines are for some economic events that are happening soon, but they're kind of getting in the way of these values here, these probabilities. It looks like most of the lows this month they either occur just above the monthly central pivot, so that means you get the low, the bottom for the month, above essentially 65, about 18% of the time over the last 22 years of data we have for the month of May. And then the rest of the time, you're finding your low somewhere around here. So there is some risk of actually skewing even lower past this 24 section here. So I'm actually going to set an alert for 64. And let's go ahead real quick, and I want to check out the average true range pivots. And yeah, there seems to be a lot of occurrences right around here. A lot of occurrences past the S5 pivot seasonally for this particular period. For monthly charts, I do prefer the traditional pivots. For weekly charts, average true range looks really, really nice. So for the month ahead, I'll go ahead and stick with these traditional style pivot points for the rest of the outlook. So yeah, when we overlay this, which is our continuous data looking for any given month, where does the low come in? It says roughly around here. And given seasonal data relative to pivot points, it says most of your lows come in around here. And I believe these are expanded pivots. Yeah, you can see the range R5, S5 here completely encompasses the range over here in the prior set of pivots. So the volatility for these pivots are expanded. And when you have expanded pivots, the assumption is unless you get higher volatility in the month of May than you did here in the month of April, it's theoretically harder to go past this S1 and R1 pivot point. So that kind of is a killjoy on reaching these 66.5 areas up here, unless we get some particularly good risk on news. And we can go ahead and check out the high odds here. And yeah, most of your highs come in right off the bat here, below R1. Definitely more than 50% of your highs. There is some highs that are up here, and some highs that are right around this spot for a more aggressive risk on look. And yeah, check out that month. At that spot, 38% of the time you top out there. And I believe, yeah, and you can see that's a high on the range probabilities. So good little setup right there. So for the month ahead, I would go with this nominal expectation of a little bit more up, maybe more sideways into FOMC. They come out more hawkish. And then the overwhelming consensus expectation of dollar strength comes in over this seasonal period. So there is a range of time here over the next week that maybe the trend starts to kick off, or we go net sideways. But once you get past that fourth trading day of May, which is the 6th calendar day of May, the net expected value seasonally over the last 20 years starts to get significantly more bearish as far as expected value goes. And as far as outlooks and consensuses, this is definitely in line with that. Let's go ahead and check out the New Zealand dollar. We set pretty bearish expectations here for the week ahead. Net expectations seasonally are quite flat. And then they do pick up really this is worse than the Aussie dollar. Yeesh. So let's go ahead and draw some expectations along these lines here. Green and then red out to the 13th trading day here. So that's the seasonal outline. And then you can see there's a more significant bounce here, probably into the close. So New Zealand looks a lot like the expectation that we just set for Australia, except it's a lot more volatile, it seems. And New Zealand, I believe, is performing worse when you rank them out of like the G10 FX than Australia. So, yeah, this does make sense. They have been having quite a hard time dealing with inflation in their economy. Let's go ahead and check out our ranges. So maybe we need to realistically pull back these expectations a tad bit. A lot of highs next month show up right around here and up here. So there's kind of two spots where a lot of your highs. So when you have a bullish month, more highs are up here. And I mean, assume you get your top here. Well, that's probably going to lead to a particularly bearish month or very, very tight rangy month. Looks like the indicator isn't updating at the moment. This is not drawing correctly. So I'm going to have to push out a hot fix for that. It wasn't like that on Aussie when I just checked it out. So, you know, little bugs as things in TradingView change. But that's why this stuff is subscription based. So then I can update this stuff as new features come into TradingView, make the indicators better, fix stuff as stuff breaks. Anyways, in a really bearish scenario, finding the low around 58, yeah, around 58 would be the spot to look for on the bearish side. I'm also going to set an alert here. So right is where I'd be concerned about going lower. Let's go ahead and timestamp that. So let's go ahead and put that one little thing lower. There we go. So nominally, in a more range-bound environment, this is the sort of move that I would expect. But in a super strong dollar, super weak New Zealand dollar environment, continuation past here makes more sense. Because note, these odds here are really, really low. Very thin gray probabilities. And here we have green probabilities, very high probabilities. This is 9.8% of the time for any given month, given all the charts history that we can load. The low comes in around here. But once we go past here, the odds get really low. So the odds of finding your low here are not zero, but they are very, very low odds. And the next most likely place to go is about 100 pips lower. So we can do one more thing before we timestamp this stuff. I'm going to look at these closing odds, and yeah, the bounce up does make sense nominally. And let's go ahead and check out our probability pivots. So our probability pivots here say if the high for the month comes in below the monthly central pivot, 23% of the time the high comes in below the monthly central pivot. And whenever I see close to or more than 20% of highs below the monthly central pivot, I start to factor in bearish continuation setups, which look like this. So that would be bearish continuation, And this would be the setup for that, where you find your entry right around here, below the central pivot, and then targeting essentially this 58 spot, if not a little bit lower than that. I don't think the odds for that, in all seriousness, of going that far low are fantastic, unless we get worsening economic information coming in towards the middle of the month that ruin this move up, right? Which was this more aggressive risk off scenario here. But I don't see that playing out as of yet. Maybe once we get closer to the first or second week of the month, we'll have more information in the outlooks and more recent data to make better expectations of what's to come for the rest of the month. And when we look at our low odds here, oh yeah. So while we have a decent number of our highs skewed below R1 on the monthly pivot, most of our lows here are actually skewed lower, and actually the largest probability of finding our low between any two pivots is actually between S1.5 and S2, which is that target area for that bearish continuation trade. So most of the time over the last 20 or so years, this is either fairly range bound in, I think, probably the best of situations, or you get a bit of up and then it's really volatile towards the middle of the month and it likes to pull down a lot. So there's definitely more downside risks to be aware of going into the month ahead here for New Zealand dollar. Let's go and timestamp these things. Bear with me here. And real quick, we can actually check out the closing odds here for the month. Yeah, and you can see when you do get bullish closes, they are very spread apart and very high up, or they are more neutral range bound between S1 and R1. But when you do get a bearish move, they are skewed just a little bit past this S1. So when we're way down here, I think the most nominal close is actually just to go sideways effectively for the rest of the month. But in this particular scenario, there's kind of a split, because if you do go, let's say, into this spot here, this does make sense, but also, you know, getting lower lows off that it becomes a slippery slope. Essentially, these closes down here, I'd assume, are made closer towards the last 1 or 2 trading days at the end of the month. So your low would be very, very, very close to your closing value around these areas. So it would be like another slip and slide down here or down there. But for a more nominal expectation, I would set something along these lines here. But again, given the ranges, I would more or less expect this sort of move. And then if we look at our closing ranges, yeah, you can see this is all pretty flat odds. So anywhere in this spot around here would be a valid expectation for finding a close off the risk off scenario here. And again, this is the nominal expectation that we can set. And that is the trade plan for New Zealand dollar. Now let's go on into the next one, the pound dollar. So most of our closes for the month ahead are either here or up here. So obviously this is your bullish set of closes when you get particularly good UK data, and this is where you frequently find more of your sideways, slightly bearish closes around this area here. This is a pretty flat looking distribution. Outside of these two peaks, you have these wide areas between the peaks and these long tails. So of a lot more uncertainty when it comes down to setting closing expectations for the pound. Man, those are quite tall peaks. So let's go ahead, and before we do this, let's look at our seasonal data here. And it looks exactly the same as Australia and New Zealand seasonally, which is maybe a bit of up into FOMC if we get that. And remember, the expectations for FOMC are not particularly risk on, so I'm not too sure, to be frank, that we're even going to be getting this. The whole point of this exercise is to set some sort of nominal expectation going into those events. And then you can see from this period here, from the 4th trading day out to the 11th trading day, seasonally, you get some bearishness. Go ahead, set up our timestamp there. And then you're either going sideways and recovering into the end of the month, but the expected value is quite flat, so it could just be noise. Let's look at our probability pivots. Yeah, most of our closes are roughly around here. So it would be something along these lines. And I'm not too sure if we're going to get that low of a volatility move. So let's go ahead and look at our lows here. And yeah, this looks a lot more hopeful. Either on the pound, you find more of your lows right here off of central pivot, and that leads to a nice higher high, probably around 128 this month. So that would be quite nice to find your low above this S0.5 pivot. But past that, start to get concerned. And we can set an alert on that. And then it becomes, okay, nominally you find your low around this area here between S1 and S1.5. But then you see we have this really fat tail here. Essentially, when I look at this, I see pretty uniform odds. Essentially, past this S1.5, this is more or less falling knife problems that we get. It becomes a guess to figure out where the low exactly comes in around here. And yeah, you could set this as your expectation. Essentially, that'd be 121. And I'm not quite sure what would cause such a dramatic fall off. But nominally, after incorporating the ranges there, in a more risk-off move, I would set this as my expectation. Down here to the 122 handle. And then we can go ahead and look at our closing odds. Yeah, and you can see these are all your bearish closes. So when you do move down that far into the falling knife area on those low odds, and you'll find out that you do end up making a lot of your closes around where you find those lows. So if there is some kind of bounce around this area, going back up to the end of the month is actually not the in the world. But again, this is another scenario where the slippery slope can catch you falling lower into the end of the month. Okay, let's go on to the next one. Euro dollar. Taking a while to load their trading view, huh? Sometimes it takes a while. So it looks like most of our closes are actually bullish here for the month of May, with the majority of our closes somewhere around here between the central pivot and S1, and then they get really spread out on the upside. And then there's this one spot here between S1.5 and S2 where we find a lot of our closes. Let's go ahead, look at our seasonals. Looks quite good going into the end of April, but then again, these are very few samples. We only got 11 years of samples here versus, call it 21 years of samples there. So the amount of samples that we have is really not optimal for these final trading days here. Not every single month has the same number of trading days in it. And when you look into May, the net expected value is pretty bad all the way out into the roughly the 11th trading day of May. All right, let's go ahead and look at this. So if we're expecting a more bearish move right off the start of the month, we'd expect our high somewhere around in this first block of red bins on the ranges. And we'd expect our low somewhere around here in this block of green bins right here in the low ranges for the month. So net something along these lines here. Let's go ahead and look at our probability pivots on the upside, see what kind of risks we have of topping out right around here. And this says that most of your highs come in below R1 for the month ahead. So real quick, if we look at our highs, that would mean that we get a high either around here or essentially right off the rip, you're closer to central pivot. And given the FOMC's hawkish position, again, one thing that actually could help the euro is the Chinese economic data that's coming out. That could help benefit euro. But again, things are not looking great when it comes down to the amount of people calling for dollar strength at the moment. Just again from the difference in yield spreads. And on the euro side of things, it's much worse than, for example, when we checked out Aussie, which had more green here, probably could hold up a little better going forward. But these yield spreads are not fantastic here. You have weaker intermediate yield spreads, really negative long-term, month-long yield spreads. And when you take all this information across the board into account, it just comes out flat negative. So going into the beginning of the month, I'd expect continuation lower. Let's go ahead and look at these lows here. And yeah, that lines up with our ranges, right? Most of bearish months that occur find their low around here. And seasonally, for the month of May, most of the lows occur right around there. So I think that's a pretty straightforward expectation to set. Yeah, and then some bounce up into the end of the month. if everything turns out hunky-dory, with some opportunity of sliding lower. Oh, almost forgot. Gotta set that one to for a closing expectation. Now, while this is on the more bearish side, that's about 150 to 200 pips of movement. The other assets that we looked at don't have as much movement. I believe NZD USD. And yeah, again, trading view taken its sweet time. This is about 100 pips of movement, depending on how you cut it, 70 to 100. And then down here, this is the 200 pips of movement. So in the euro side of things, looks more likely that we're going to get that 200 pips of movement than in some of these other US dollar pairs. So maybe euro dollar short would be my pick. And I am in it. But I wonder how long other traders, because I've seen some other traders take shots and are holding the shorts over the weekend. I wonder how well their expectations hold up for the month ahead, and if they're willing to hold on to that trade. Let's go ahead and check out dollar CAD. This is one that I started looking at next week that I'm actually interested in taking a shot on at some point, probably next week. The yield spreads are now flipping a lot more positive. Again, only on the intermediate side over the last 7 days are the yield spreads negative, which is in favor. Red is in favor of the Canadian dollar. Remember, this is inverse USD CAD, so down is good for CAD, up is good for dollar. It's kind of the reverse of all the other charts that we looked at. And when we do get down moves here, positives for the Canadian dollar, it's essentially guesswork where we're going to end up closing. But when we do get US dollar bullishness, it seems more consistent between 100 and 200 to 270 pips. Quite wide ranges. You would need extra volatility to come in to reach these R1, S1 pivots for sure. Let's go ahead real quick, check out our seasonal forecasts here. And they look outside of these first couple of trading days, which is putting our forecast really low. It seems like the seasonal expected value is actually pretty flat. Net across the entire period, it's just flat. And if I were to take a guess when I'm looking over this data here for May, it maybe skews a little bit more positive on the expected value side, which would be bullish on the US dollar side, but it's definitely not as US dollar bullish as the other assets that we looked at today so far on the FX side of things. Let's go ahead, look at our highs. And yeah, most of the highs for the month of May here on USD CAD show up around this R1 pivot. So probably 138 is not the worst expectation. 138, 139, not the worst expectation in the world to set. There is some odds that are way up here, but those are definitely shock values. And if we look at the low odds here, yeah, most of the lows end up down here. So maybe we see some improvement out of the Canadian economy, either at the beginning or closer towards the end of the month, where either we get more of a down move and then an up into the end, or we get an up move around to this R1 and then good economic data comes in and it really comes in good for the Canadian and it reverses most of this move and essentially establishes this range here. So that'd be nice to see. The Canadians would be quite happy and relieved after a move like that. Let's go ahead and check out our ranges here. Yeah, so for most USD bullish months, you're finding your high up around here and your low down and around there. Real quick, I want to bring up those low odds real quick. So, yeah, if I were to guess what was going to happen, I would probably expect the up move to here around the middle of the month and then the pullback. But I don't know, that seems kind of extreme. So let's go ahead and look at our closing odds real quick. And yeah, when you do make this up move, and I'll go ahead and color this green for you guys, timestamp it, you do find that the close either goes like that, and you're making a slightly higher high to make that close, or you're pulling back just above the central pivot. So it seems more likely that if you do get this up move and you are expecting some downward movement, it would look more or less along these lines. Like so. And we can color that one blue. So if there is any improvement on the USD CAD side, it would come like really close to the beginning of the month. And then, yeah, some move higher up into there, and then a pullback like so. Yeah. Pull up into these highs here, pull back into these closes here, pull down into these lows around here. There's not that many seasonal lows at that spot. So maybe there's some opportunity for a slide, a bit of a slide lower. But again, for setting nominal expectations, this seems just fine. Now let's go ahead. I'm going to skip dollar yen because as far as I know, this thing's going to go up, up, and away until the BOJ intervenes. And either the BOJ is going to intervene post FOMC or they're just not going to intervene. And in which case, I'm on board with the guy on Bloomberg who said the thing's going to go to 170. So it's, you know, even if I were to set expectations for it, the likelihood for those expectations to be wrong is like 90%. The thing could go higher, it could miss by like 200 pips. There are other factors at play that are moving dollar yen right now that are not well fit or suited for these kinds of indicators. In situations like COVID, a lot of systems just break down, and you have to just trade what's going on in reality and look at things almost day by day. Otherwise, if you just rely on a system that provides historical data and historical reference, and you try to fit that with your outlook in a very extreme current situation, you get steamrolled. So let's go ahead and check out equities. Yeah, going down to here makes sense to me for the month ahead. And going higher also makes sense. Or going higher right off the bat. And then falling down. but I don't know. We'll see. I'm always more of the guy who would expect the down move here off the bat and then higher towards the middle of the month, like so. Again, just a nominal expectation. Nothing incredibly fancy about this. And we can always update our expectations with new time-stamped expectations. And I mean, I don't know what else to do. That's pretty much my expectation. Net flat, slightly bearish seasonality. Not a whole lot to read here on the seasonal front with that indicator. Let's check out NQ. And yeah. All right. Let's go ahead and check out the probability pivots. Yeah. Hopefully it's a down move first. And then a move higher into the monthly high like so. Effectively range bound between here and down here. Yeah. And let's check out the seasonality. Also pretty flat seasonality. Towards the end of the month, there does seem to be some negative expected value, but it's also pretty flat, pretty low. And then this area right here, between the 4th to 8th trading day, there is some slight negative expected value, but it's quite minor. Okay. Yeah. I am all right with this set of expectations going forward. And let's go ahead, check out some commodities for the month ahead here. Wow. Most of the lows come in above that S1 pivot. So this looks pretty straightforward. Yeah, probably finding your low here or right around there. Probably more likely to find it there, in my opinion. Set that to red. And on the upside, wait for it to load. Yeah, most of your highs are around here. 41%, 20%. This is pretty high odds. Pretty high odds. So probably something along these lines. Yep. Around 88 bucks could be the high. Is there any bullish seasonality here? Yes, there is, quite definitively past the 5th of May. So let's go ahead and adjust our expectations a little bit. And it goes out to the 15th of May. So this looks pretty straightforward to me as far as expectations go. And we can set some closing expectations as well. And I can't tell if these are being placed correctly or not, so I'm not gonna bug with that. I gotta fix whatever's causing that problem. That bug only started showing up in like the last like 3 or 4 days now. So, yeah, new problem. Gotta fix it. But at least we have the ranges, the probability pivots here that I can use for actions. And you can see most of the closes are bullish or slightly bearish. And then you have some tail here for your particularly bearish oil events. But it looks like most of the closes are leaning for a net green month for May. on oil. Let's go ahead, check out gold. You can see I got a lot of commodities here in my watch list. Gold looks like it's going to have a net bearish month. So something along these lines. So probably not going to be a great month for gold ahead of us. Let's look at our high odds real quick. Yep. So maybe a move higher off the rip. And before we continue, let's look at our seasonal forecasts here. Yeah, you can see right here off the rip, you get some bullish seasonality. And then towards the middle of the month, it's bearish. And then back at the end, towards the end of the month, you get some good bullish expected value here. So maybe what we end up with is an up into the close and a down, like so. Given the seasonal expectation. And we can offset that by 1 day, like so. Let's go ahead and look at how this lines up. So that would be a pretty bad low there. 25% of the time, your low is lower than here. And this is all, you can clearly see the tail risk stuff. So this would be pretty bad. So I'm also going to adjust this so it's a little lower. Yeah, so roughly around that R0.5 is where I'd expect the high to come in. And on the low side, let's see how likely we are. Yeah, check that out. 29% of the time, the low is roughly around here. And in some particularly bad months for May, the low comes in like in the 2100s handle, which is especially bad. I don't know what would cause that going into next month. This would be my nominal expectation going into the close. Yeah, this would be my nominal expectation for gold. We can do Bitcoin, but just FYI, there's only 13 years of data on Bitcoin. So this can vary wildly. I also like deleting those drawings done with the pen. I like just having room for the arrows here. Yeah, with Bitcoin, it's always hard to tell because you have quite a lot. When you have all these closing odds up here, these are all super bullish, like huge $10,000, $20,000 moves. Those are just insane. Not a whole lot of downside. So if I was gonna set an expectation, it would probably be for maybe some sort of slightly lower low around here. And then to just go higher from there. This is, I think, for Bitcoin, going to end up being a more bullish month. Not. Remember, Bitcoin has its own behavior economically. Just because the dollar goes up or the dollar goes down does not mean Bitcoin has to go up or Bitcoin has to go down. So a bullish expectation for the US dollar does not necessarily mean I have to have a bearish expectation for Bitcoin. Yes, Isaiah, I have already covered ESNNQ. And the forecasts were quite light, frankly. It was actually net bullish. So if you want to see how I broke this down, and you can see these are pretty good closing odds up here. Yeah, looking at these closing odds, might want to set this a little bit higher. essentially back to these prior highs and then pull back from there into the end of the month. Asked. Good thing you asked, because I was not looking at those closing odds just yet. And then on the NQ side of things, how do these closes look? Yeah, they're also super bullish. You don't get closes down in the bearish areas too frequently, and when you do, they are really bearish closes. So real quick, it'd probably be something along these lines. I mean, you're kind of splitting hairs here. And then, like so. But there's more commentary for you if you do watch the VOD. Have I covered EA, NC, and GN yet? Are you using, are those FX pair crosses, Euro, Aussie, New Zealand CAD, and Pound New Zealand? Is that right, James? But yeah, this would essentially be my net expectation here on Bitcoin. Probably want to do something along these lines a little sooner in time. Like so. No, I haven't covered those, James. Those are all cross pairs except for the Swissy. And I don't usually cover the Swissies. But I'll go ahead and bring those up because you asked. Not a problem, my man. Wow, those are blinking red yield spreads on Euro Aussie. Yeah, I would not be surprised if this thing just keeps trucking lower. Let's just set that as our expectation here. Right off the bat. I'm pretty sure these are non-seasonal moves. Yeah, check that out. Most of the lows seasonally are around there. Most of your lows using non-seasonal data can also end up around the same spot. So this would be my expectation. Probably, yeah, about another 100 to 170 pips. And when you move this far down, probably best to just look at it close. Yeah. So probably it zigzags and makes a close around there. Or it makes a slightly lower low, like that. But again, for nominal expectations, this is all well and good. We can look at this and, oh wow, check that out. Most of the bearish move here comes in the first week. So actually, yeah, and you can kind of see the positive expected value come in on the 9th trading day right there. If I hide this real quick. Yeah, so that seems pretty well set as the expectation that I should have for Euro Aussie. New Zealand, Swissy. Let's check that out. Quite positive yield spreads. They're holding up quite well. It's pretty mixed seasonal expectations, to be frank. There is this string of some negative neutral expectations, more likely to be a bearish trading day than not, around the 6th to 11th trading day. So this whole section right here, as you can see, just by looking at the table, I can see what's going on over here with these candles. Real quick. Yeah, but there is definitely a more bullish skew to things. So I would say something like an up, a down, and then an up again into this month here. So let's go ahead and check out where we could find our low. Yeah, so it's probably going to be something like that. And then make a recovery into the end of the month. Don't know if it's going to be a green or a red month, though. Let's look at our closing odds real quick. Yeah, we can set something along these lines. Look at our high odds here. Yeah, probably find the high right off the bat. And then effectively close neutral. Man, that would be crazy volatile. To go all the way up here and then all the way back down. But considering the more risk-off expectations that I have, I think the thing's gonna end up rolling over. Yeah, that makes sense to me. So let's go ahead, put that in as the expectation for New Zealand Swissy. Go ahead, color me right. And Great British Pound, New Zealand. Pretty flat on the yield spreads. They look overall quite negative, but they're not negative by insane amounts. Looks like it follows yield spreads quite well, but it's been super choppy as of late. I would probably expect this one to appreciate. Wow. Yeah, check that out for next month. A lot of highs up there. A lot of highs up there. And how are the lows? Are the lows also quite volatile? No. You get quite a lot of lows right here above the central pivot or just down there. It seems like maybe one move lower to around here. And then probably up to around here on the month. Let's go ahead and check out our seasonality, and yep, that lines up quite well with our expectations so far. So into the, call it the 11th or the 12th. And then we're going to look at our closing odds here. So probably some kind of drift, lower pullback into the close. Again, no expectation, just given the data that we have available from these indicators. New information can become available and update these expectations in the future. And when I set new expectations, I'll set new timestamps and drawings during a week ahead trade plan or a new month ahead trade plan, or just during one of the streams. I'll be updating one of these trade plans as new information comes along. And we can check out the DXY as a net view. Looks like most of the closes are going to be like so, nominally. So if we do get any sort of pullback, it's probably going to be a more conservative pullback here into essentially 106. Color that one red. And then up into here. Color that one green. And then down into some nominal close. real quick. Check out our seasonal forecast here. Try and ignore these first 2 trading days because the current month of April is not over yet. So here's our data for May. And it looks bullish up until the 11th trading day. So maybe keep that on the more conservative side here. And then take this out into the 11th. So something along those lines there. Go ahead and check out our probability pivots. Wow. That is a much more aggressive low. So if the Fed were to come out more dovish, going below 105 would be my expectation. But you can see even from last month, the bullish expectations for the US dollar are creating non-seasonal expectations. So I'd kind of discount that low. And let's look at our high odds. And yeah, most of the highs are pointing around to this area here too. Just above 107. So I would not be surprised to see 107 reached this month. Would not be surprised. So I hope you all have enjoyed the stream. I think it was about as long as the week ahead stream so far. If you like access to these indicators or to the trading group where I go over my own trades and go over these indicators essentially daily. If you want to learn how to use these indicators for yourself in your own analysis, go ahead, hop into the Discord, join the trading group through WAP. And yeah, thank you, James, Isaiah, and Ari for hopping in here for the month ahead. Really appreciate everyone watching, and everyone who's watching so far to the end, definitely leave a like. All right, you guys. If you want to hang out with me, come hop by the Discord, send me a message, and I will see you guys in a bit.